Friday, yeah.
Speaking of Thursday, Fridays. Giving you alpha every day.
Every morning at 8:45
Sing it, man.
Eastern, Option Omega's got your back.
That's true.
Like LeBron, Max back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's
But what about Rusty?
to the mind, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Morning, everybody.
Morning.
Good morning.
Happy Thursday/Friday.
Thursday/Friday.
Happy Friday.
The Friday, Thursday.
Yeah.
The guys, markets in turmoil / everything's fine. I mean, This is just what we do every day now.
Yeah.
The 100-point moves have continued. Morale has not improved.
I woke up this morning as my custom to use the restroom 4 to 5 times an hour throughout the night, and
I'm with you.
That's normal.
I would check the futures, and I woke up this morning. I was like, Dow down 600, but then I was like, well, so what's ES opening? And it's like ES up 30. I was like,
as
what?
you do.
What market are we in right now? Where
Yeah.
Dow's down 6. There's no correlation. That to me is a sign almost immediately. And I could be wrong, but when I see that, I think that is a great income trading day, is when markets are not correlated.
Are you talking pairs trading?
No. I'm saying like any type of like positive theta trade.
Range bound, yeah.
Range bound. Yeah, that's right.
Gotcha.
Range bound. Because usually again, watch it go 4,000 points one direction today. But usually the market, if it's not correlated, as long as it's not correlated, it's going to be range bound. Does that make sense? Like if Dow's one where ES is up, those have to play out, and that's usually going to mean like it just stays in a kind of range.
It brings up an interesting point because we're starting to get into earnings season again, and so this Dow move I think is United Healthcare. It looks like with a pretty substantial move, and so if we start getting these earnings where certain companies I noticed one of the airlines I think like didn't mention the R word in their written documents, and so like you could see some weird disjointedness here as earnings season comes around, as some of these companies for sure are going to be hedging their forward-looking statements, and how's the market going to react to that?
We should do an earnings show one day, not this round, because we got some other stuff we're having to deal with. But
that could
maybe back test some Tesla options, some Apple options.
That could make you're right, Matt. That can make the earnings thing pretty exciting because you're right. The forward-looking stuff, there could be some like, really?
That's right. That's right.
Yeah.
Well, and you know, we're in this situation where kind of the obviously the main market mover has been all things Trump, tariffs, trade, you know, and then yesterday we have like a 3% move, and it's not those things. It's the newsmaker for the last, 4 to 8 years, Jay Powell, talking, and we have a 3% move, and it's like, oh, just a 3%, like that's felt small, like, and then we had, I think I don't know if it got exactly to 3% in the S&P, but it got close, and then kind of a violent upward move off that bottom. So it's just this strange times.
Well, and that's kind of the fear thing, that run up from the bottom. It's not like we It's not like we continued down into the close. Like you said, we came back.
right.
And now, I mean, it's like when the VIX opens, it'll probably be 30. We might dip under 30 today. And it's
Right.
like, what happened yesterday? Nothing.
Right.
It's like, so it definitely the fear. I mean, they handled Chairman Powell's comments well, even though, pretty jittery, right? I mean, at first.
Yeah.
And so, yeah, I think it should be, like Troy said, more of a range bound sellers of options but because if yesterday, now to me, the only thing, what do you think about like yesterday? If we would have stayed strong low into the close and had a big day, now you got the 3-day weekend.
Oh, those are my favriets.
Those are my favorites. Then Troy comes in. Then Troy comes back.
Yeah, Troy awakens from his tomb.
Yeah.
That's
Troy.
Yeah, like
one more round.
One more, yeah. But I didn't hear no bell.
Yeah.
So let's look at the market profile chart just because I think it's interesting. So that's not the market profile chart.
That's a green back test.
That's
Troy.
a green back test. We'll get to that here in a second. So I have a dear friend who was hanging out with last night, and he wanted to show me a YouTube video, and an ad popped up, and it was a guy, a trader, who said, listen, is a YouTube ad. He said, all I do is I give my people alpha all day long. I just give them alpha.
He's a giver.
He's a giver. And I'm going to start using that because I too want to be seen as a terrible human being. So I'm going to just start using, listen, all we do on the Option Omega show is just hand out alpha to you.
That's right.
Because yesterday we said we could go to 43.17. I think that's right, Dan?
Yes.
And where'd we go, folks? We went to 43.17. Now, what I didn't tell you that is, because I never thought we'd go that low, is we went to 42.50, I think.
52.
52. That's an interesting number because if you look at it here, that's yesterday's low right there.
Yeah.
That's crazy.
Look at Friday's low.
That's like almost to the tick.
Yeah.
Yeah. And so that in my mind, via Jim Dalton, via market profile, one of the things about that is that tells me, that exactness tells me that these are day time frame traders who are basing their trading on technical levels. Because you think about when big money is moving things, when big money is buying and when big money is selling, they don't use technical levels. So you think about the tariff sell-off last week, a week before. It was indiscriminate how much they were selling. You know what I mean? Like they weren't basing it on some technical level where they're selling. They were just selling.
Yeah.
And the market was having to deal with it. And so that shows me, at least today, yesterday, that this is kind of technical traders who are daytime frame, and we're trading on low volume, and probably everybody's going into the weekend. So.
Yeah. I'll bring out the old chestnut from Michael Burry, famous of The Big Short.
Oh, I like
when he talks about technical analysis, he says, I guess I still watch the charts a bit, et cetera, et cetera. Maybe technical analysis is only useful because others use it. I don't know, but it's interesting to watch, and I believe in it to the degree it reflects crowd psychology, which is kind of exactly what you're talking about, Troy. I mean, the odds that a week later we literally get to the same tick, it's like, and that happens. That happens on a somewhat repeatable basis. You can see these patterns.
Oh, I think you combining stuff like market profile and some basic, some charts with a good healthy dose of contrarianism. I mean, in the pits, traders were just, some would, because they were more focused on volatility, that was just the way it was in risk management. Some would take the extra energy to learn charts. Most didn't, right? Because they were, like me, probably too lazy to do the chart stuff,
Yeah.
But that contrarian was in everything. I mean, it was just, but the problem with contrarian, in my opinion, without charts, market profile, things like that, it's easy to, okay, we have a day up, I'm going to sell into it. Well, we've seen times where you can go 5 days up, 6 days up, and then, that can really test the pocketbook of a contrarian. So I think a healthy dose of contrarian with some of the other market profile and some of these. I like market profile just because it's based on something I understand, volume, right?
Yeah.
And it showed, like Troy said, I think that's an interesting point that you could see with the volume yesterday. It's not the hedge funds coming in yesterday, right?
Yeah. That's exactly right. Yeah, it's futures traders.
Well, and when we talk about today and what today's going to do, it's just a weird confluence of factors because, typically Fridays often have somewhat of a bullish tint. A lot of people theorize that's the paychecks getting deposited and people's 401ks in the US and all over buying S&P. And then Thursdays also kind of have a reputation of, if there's been a lot of outlier moves that have happened on Thursdays, especially in the last couple of years. So is today a Thursday? Is it a Friday? It's been a very muted volume week compared to the past couple weeks. So
it's a Thursday.
It's a pretty interesting. Yeah, it's a Friday before a holiday in a low volume, somewhat consolidation.
Matt, you would say Thursday. If Matt, you would say, like, from and Troy, your back testing over the years, if someone said the day that has the biggest range or the biggest move by far would be Thursday.
Yeah, there's a lot of outlier moves that have happened on Thursdays.
Okay, and being a trader or involved in trading for years, I never pegged it to that until you guys came with the data. I never, like Moneyball, I didn't know the data.
Right.
I couldn't tell you which day. I was lucky I got up in the morning to go to work.
Yeah.
So the fact that you guys could peg it to Thursday is very helpful.
Well, we'll show some Thursday back tests, but there's a lot of different movement trades, long straddles, long strangles, long ricks that have done well on Thursdays. Now, what's interesting about Thursdays is we're coming up on 3 years of having 0DT SPX options on Thursdays. So there's not a enormous amount of data. It's still just a couple, 150 or so data points here in the last couple of years. But in those 150 data points, Thursdays have had outlier moves. That doesn't mean that every Thursday is a move, and it's kind of seasonal. Like there was during like last summer, there were like 3 or 4 Thursdays in a row that saw crazy movement, and then there wasn't crazy movement for several months. So again, is it fooled by randomness because we only have 3 years of data? Maybe, but it's been over the last 3 years, Thursdays have been interesting. Today's a totally different case because we don't have a tomorrow today for the market, because tomorrow is Good Friday globally. US markets are shut down. So I'm not a good prognosticator, which is why I predominantly trade mechanical strategies. But
if you and Troy had to guess, just when you say Thursday, if someone said, why do you think the Thursday, would you say, is there any possibility to say maybe, well, because that end of the week is heavy news type stuff?
Well, and it's, something that I don't know if a lot of people have back tested, which is, now that we're talking about, is actually a great idea for back test, is how many of those big moves are related to Wednesday news the day before?
That's right.
Because a lot of the Wednesday, the Fed, our boy Jay Powell, a lot of that Wednesday movement might be Thursday digesting it, either continuing or reversing. And Thursday, so that's a great question.
And Thursday before the opening, there's a lot of those PCE, whatever those things.
Yeah. Right.
Some of those
CPI and PPI, a lot of those run on
Thursday before the open. Yeah.
Right.
Interesting. Yeah.
Yeah. Like, this is one of my great annoyances in life is you can look at data and you can see a clear. Again, you can be fooled by randomness, so I think that's important to say.
Yeah.
But you can see with your eye, at least, patterns.
Yeah.
But you have no understanding of why that pattern is.
That's right.
And I think everything else is a prognostication.
That's right.
And so there's a certain level where you just have to trade it. But to the point, in some ways, it kind of plays into what you were saying about technical analysis. Because like on some of my charts, I have a 8 and an 8 SMA, a 20 SMA, and I have like VWAP or something like that. Yeah. Now, why is VWAP such a powerful thing? I don't necessarily think it in of itself it is a powerful thing. I think people look at it and use it as a trading tool, and that's what makes it powerful. It's just a bunch of people are looking at it at the same time.
Again, it's almost the same quote as the Burry idea, which is like some of these ways of trading are so predominant now, even if the underlying reason that people use them maybe isn't valid. His point is the crowd psychologies. There's a lot of people using them, and you have to pay attention to them.
For sure.
And to the chat, shout out to the chat. Just had a comment, another comment just right on this same discussion, that yesterday's low was the same as the high about 2 weeks ago. So like you see these levels coming at over and over again. Yeah. People clearly can identify the levels. So whether or not you think the underlying TA is garbage, which, people, we're not huge TA people in that we don't have 10 different charts pulled up and contrasting RSI with MACD and a golden cross. And, we are saying that there are these big levels that people are using TA to find, and there's enough people using them that for some reason they mean something.
Let me just say this too. With option trading, to Dan's point, it is a contrarian thing. A lot of options traders are just contrarian by their nature. You kind of have to be sadistic a little bit to love options. And so I think but the way I look at technical analysis, I'm not waiting for something to hit something to put a trade on. The way I use technical analysis is for instance, if I think the market's going to go up, right? And this is discretionary, not my automated trading, my discretionary trading. If I think the market's going to go up, I look above me and I say, what's above me? I say, okay, the 8, the 21, the VWAP. Well, I will use those as exit points. So I will target my strikes around those positions because I think at some point it might stop there, at least for a moment, to get out. And so it's that's the type of thing. I'm not waiting for it to do something. I just see it as you're down a highway, you're going in this direction on the highway. What are the mile markers? Well, there's a rest area right here, VWAP rest area. There's probably going to be a chance where we can get off right here.
Yeah. But it's good to like, I'll call this what I'm going to say next, the scope of the ocean, the bigness of the ocean. And like, I remember being in the trading pits and people, there'd be guys in the pit like, we're going to pin to this strike because there's a lot of open interest expirations coming up, big open interest on that. And you know what? Because the traders there was like, and we could describe it one time, this kind of unwinding of, people are short 1,000 options at this, so there are a lot of gravitation towards a certain strike. And people say, but people get too caught up like, hey, that's going to happen. A lot of open interest. We're going there. But I've witnessed, right? I couldn't tell you the date, but I've witnessed more than one time that this wave is bigger than 12 surfers or this ocean is bigger, that when the market wants to move, I don't care what stinking open interest is at a strike. It moves. And I think it's the same thing, like Troy said, versus technical traders versus when smart money or big money comes in, you can, hey, that's great.
Just get on the wave, whatever direction it is.
Get on the wagon. It's going, and you can kind of sense those days too. Like I would be in the pit and the open interest, and I could see, wow, there's a lot of volume coming in. The market makers with their little puny, the market makers are very small. People, I love when people say, well, market makers control the vol control. They don't control anything. I mean, they're so small capital compared to the market, demand and supply, right? The reason volatility goes down on Friday and then comes up on Monday, the market makers aren't when people sell, they just lower the volatility. And then when they go away, those sellers aren't there on Monday morning. So they raise the volatility right back up. And that's why I would bet 80 to 90% on Monday mornings, VIX is up, right?
Yeah.
Because of that. So I just think I think like Troy said, you put it in perspective. Technicals are a wonderful thing to use, but don't believe the press clippings, right? When the market's ready to move, you get in the way because of your,
that's right,
your way of thinking. It's painful.
I can tell. I can tell Troy's getting serious. I feel a back test coming on.
There's a back test coming on.
He's about to show a back test. He's got the mic out.
To the point, Stephen, we get VWAP requests all the time, and it's something that we never say ever to anything.
Many hours have been spent discussing this.
We've had a lot of 3-person conversations about VWAP. So I can see a world where one day it is in option omega. I'll put it that way.
Is that related to hip hop in any way, Troy? VWAP?
This will get us on a huge rabbit trail.
VWAP will make you jump. It'll make but anyway, so all right, here we go. I'm gonna look at this test real quick. We're gonna do a test and then we're gonna go because markets in turmoil.
What you got? Okay.
So we're finishing our week of looking at trades that are curve fitted that obviously would have worked during the last 2 weeks. But today I wanted to go a little bit different. I wanted to show you something that, going back to SPX dailies, to prove a point, because the whole point of it is to say, well, sure, like you're curve fitting something, so like it could have worked, but this is a test showing you what it would look like if you ran this back to SPX dailies, and this is it. And I will tell you straight away, as someone who option omega exists because of these type of tests. This is why we got into this game because of volatility. And so this is why option omega exists. So I can tell you there's much better hedges than this, but it's just an idea. It gives you hope,
an idea generator. Yeah. Troy, can you click on one of the trade replays at the top? Like, let's the last two or something.
Yeah. Let's talk about it real quick and then go through it. So what is this? You're buying a put 60 days out on the 4th Monday. So every 4th Monday, final week of the month, 3:30, you're putting a 60-day, you're buying a 60-day put. You're allocating 1% of your portfolio, and your profit target is 1,000%. That's it. Okay. And you win 4 times. And you're like, well, I don't trust that data. Like, well, guys, sorry, we don't have life-changing volatility events a lot. Right. So you have to kind of go with it. But what you'll notice is that you lose 88% of the time.
Most of the time.
87.5%. That's right. You're just throwing money away until you're not throwing money away. And so the way this stuff works is your trade is just sitting there decaying all day long. And it is going to largely follow the vol. That is how this works. It's going to largely follow the vol. It's going to follow the VIX.
Follow the vol. I like that.
Follow the vol.
The vols.
And so this is a simple trade. But I wanted to show you it back to SPX dailies, because say this is one of those where if you look, I mean, we'll just do it real quick. We'll go last 30 days. You say, well, of course, you have a 1,500 MAR because you have one winner. You're 1 for 1.
You bought it at the right time.
And you bought it at the right time. And you'll never have these on the exact right time. Correct. That's why if you are hedging and you believe in this stuff, you always have to have them on. Because this past one was the most planned crash in history. As far as I can tell so far, it was the most scheduled crash known to man. But usually they are not this case. And so how does this stuff work? Well, it works when, like in August, suddenly the yen is unwinding.
Yes.
And we're having like and honestly, this is a separate show about when will the big one happen. The big one's going to happen when the yen unwinds. Like, that's why I think that was such a fear. I mean, it went higher than we have in this crash, the VIX, because that's a big event. And you can look up why that's a big event, but it's not good for the world when that happens. So, but the other things are like, you'll have instances where it's like, I woke up to a tweet saying that we launched stuff against Iran. Like, it's this type of moments where a vol will jump real quick that some of these will hit through time. Now, this won't hit because this is 1,000% profit target, but I'll give you a hint. You don't necessarily have to take 1,000% profit target. So, guys, what do you think of this trade?
I would love to, I'd love to do a whole week on these. And as you said, there's better back tests on there. What I like about it is I have run hedges that are VIX dependent. And as a result, I didn't have hedges on this last time because VIX had been elevated for months and my hedges they just didn't qualify. I like that this is agnostic and it's scheduled, right? You can plan on it. It's interesting that it's just once a month. And it's so simple. I mean, there's value in the simplicity. Again, when you're just putting on a single contract or a single trade once a month with a monster profit target, it's just a binary event. So it's very simple. No fidgeting. I like the no fidgeting.
Yeah, a couple quick points. To me, I think Troy was mentioning, or Matt, idea generation. But to me, there's an important principle here. This is the tails of the curve, right?
That's right.
We didn't have Moneyball when I was in the trading pits, but you know what? You ask any trader, do you get crazy moves more than the normal log normal distribution curve? Any idiot like myself or anyone else would tell you, yes. It sure seems that way, right? We'll confirm it in some decade in the future, right? When things come, but this is all about what Troy's doing. To me, this is insurance. He took a stinking one delta, right? And then the first test, 4 of them cut loose, right? And the other thing, right, Troy, on those 4 trades that won, we weren't anywhere near the strike price. Anywhere near. So it's like, people, if there's anything you get out of what happened the last 2 weeks, learn, appreciate, embrace volatility, implied volatility. Understand it, grab it, hold it, hug it, because that's the thing. Look at these, like Troy, maybe if you the 3 or 4 winners, how many points we were from the strike.
Another 20% correction after a 20% correction.
1,000% returns, and we need another correction to hit the strike.
And this is one of the keys is when I first started tail hedging, people would look at you say you buy a 1 delta and they'd say, but it's never going to hit. You're wasting your money. And that's one of the with all due respect, because we're all on this journey, we're all learning. That's one of the quickest ways you can tell me that you don't understand options.
Period. Yeah.
If you say something like that, because we are 1,000 points, 800 points away from the strike price here, and we made 1,000% profit. How did we do that?
Yeah.
Because there's a thing called Vega that increases your deltas and it increases your gamma the more Vega expands. And so that's how a 1 delta that really, even after a 10% move, might be a 5 delta, gets transformed into a 10 delta pricing wise.
Yeah.
Because of IV expansion.
Yep.
Yeah.
So
IV expands, you don't need to be there, and Bob's your uncle.
Yeah. Try get 10. One quick one. And I remember a friend of mine, Karen Bruton, who in Think or Swim lore, Karen the super trader.
Oh yeah.
And I interviewed her a couple times, and we talked about this thing of insurance. She would sell a lot of. She had a portfolio margin account and millions of dollars and selling puts, some puts, but it was like this concept of insurance. And what she would do, using the principle, buy them when you can, not when you have to.
That's right.
When VIX would suddenly, visit the 12 area or 11 or 13, she would slowly she would accumulate quite a few at those levels. And I think people do that. And it's a hedging process in insurance. And that's what I think people do. And I think that's the concept of understanding how, even though the price move on a long put is far away from the strike, the volatility made it a superstar. And so, and you're getting out at those points.
That's right.
Anyway,
it's always a good thing to remember. Someone sold me that.
That's
right. That's right. And the reason they did is because they won. I mean, this is hypothetical. They won 32 times, or they won 28 times, right? There are certain strategies you see in up markets, and I'm not going to say what they are, but it don't take much to look them up and find them. There's certain strategies in up markets where everyone's a genius, and you say, I'm naked puts, or I'm net naked puts. I'm net short gamma, because this thing, all it does is win. And look where we'd have to move for me to lose. That's not true. That's right. Fundamental. That's a lie. That's not true.
That's right.
You don't have to move there for you to be a massive loser. And unfortunately, this last round, people found that again. People find out when people say, why does this keep happening? Because we're really forgetful people. And I would say they probably remember about 4 times every 3 years.
That's right.
That's what my guess would be based on
the other thing, Troy, in this, wouldn't you say, again, ultimately to me, it comes to risk management. There is no bad trade.
That's right.
There is no bad trade. It's like my brother-in-law in Helsinki says, there's no bad weather. There's bad clothing. Right. And I think the key here is, if you take the person on the other side, Troy wins 4 winners out of 32 trades. Did that mean the person on the other side of the coin gave up everything on those 4 losers? No. I mean, they have a right as an American or wherever they live, we have risk management to say, okay, I'm selling a put at $4. When I lose 2 times my premium or whatever, I'm out of here. Right. Or whatever. Good risk management. Again, I'm not promoting naked options. I don't teach it. I don't believe in a lot of naked options unless, you have quite an experience level, but buying those back in, and both sides can win here. But the person who's doing the winner, or like Troy with the 4 winners, you got to play it differently. You can't have, Troy couldn't put, I'm going to try to make 10% profit. It's not going to work, because he's going to lose most of the time. 100%. So you're going for the home run. So as long as you understand that on this thing, makes sense. So good study today, Troy.
Well, and to end it, I would say anybody who, with all due respect, Dan, anybody who says there's no bad weather, that's an absolute psychopath.
That's right.
There's some terrible weather. Like I can name 4 or 5 bad weathers. So, but blessings to whoever said that.
Their brain works. They lived there their whole life.
If I lived in Finland, I would say something like that too. I'm sure as well. But anyway, that's right. Hey, real important thing for you guys tomorrow. Good Friday, not just a global holiday, some could say a universal holiday, is no show tomorrow. Markets are closed. Enjoy the weekend. We will be back Monday. Dan will be traveling Monday, but Matt and I will be here. There'll be a show Monday. And then Tuesday, we will be live on location from Finland, where there is no bad weather. And we'll put that to the test.
I'll be wearing my scarf and my hat on an igloo.
Yeah, where are you gonna do the show at, Dan? Are you gonna?
Oh, I think in my son-in-law's den, wherever.
Igloo. We're hoping it's an igloo or a sauna.
I'll try to get it out. I'll try to see if he could. They have a little outdoor area, so you can I'll see if he can set me up there, just so you can see some Finns walking around.
Oh yeah.
I'll tell you what. There are hardy people. They don't. Because if you're going to live in that climate, right?
Yeah.
You better get used to being outside.
Created the Vikings, right? They took over.
These guys.
They raided Paris. They took over all of Europe.
You got to do it from a sauna. Everywhere. We need to get you in a sauna doing the show.
Sauna. Yeah, I don't know. It at this point, to put me in a towel would be it'd be a horrible, it'd be an ugly show. So we'll try to avoid. But yeah, sauna. I mean, almost every house dwelling in Finland has that sauna. Troy, what was when we were, grew up going to the YMCA, the triathlon was the shower, sauna, and steam, right?
Now, if you really want to gross out my wife, what I'll tell her is I'll say, well, I switched out what I do now is I do hot tub, steam, sauna with no shower. And she'll say, you disgusting man, you disgusting.
I forgot about the hot tub. Yeah.
Oh yeah. You got to go for the hot tub as well. Listen, I will say this just before I forget. I mean, to the point of they've been a hardy people, those type of people in Finland, they are the Campbell soup of people. They just have it locked down.
The Vikings there.
It is what it is. So anyway, guys, blessings to you. Enjoy your long weekend. We will be back Monday. Have a good day.
See ya.
See ya.